Hey everyone, Bob Kendall here. Just want to thank you all for watching my videos. If you do want to support the channel, go to www.kendallreport.com/wavetech. Sign up for our software. You get market grid on 165 individual stocks and indices. You also will get 16,500 buy and sell signals on our entire database. I thank you so much for supporting the channel. Those of you who have already signed up, thank you so much. Welcome everyone to the Kendall Report, where I share my 41 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Well, yesterday we saw the markets continue to try to move higher, but we stalled right at or near the highs that we've seen over the past several days. We printed just short of making an all-time new high, and we saw the market starting to back off as we came into the close yesterday. NASDAQ actually had more of a selling than the S&P did, but overnight we're seeing a continuation. The markets rallied a little bit after the close, and then now they've come back in, and we're seeing the S&P down about 10 handles. One of the things that I've been talking about over the past several days, that we're going to get this 5-3-5 pattern, and so far we had 5 days down into Sunday night's lows. We've had 3 days up now, and now we're likely to see at least 3 days and possibly 5. We'll understand this pattern more by the time we get into Friday's close, so I'll be setting this up in the next 2 videos. I'll go through all this detail in a minute in the technical section. But as we come into Thursday, as I've been talking about all week, I think if there's going to be any type of failure that's going to happen, it's going to be around the continuing claims numbers and the claims coming into the employment situation. And we also have, I think, 223 earnings reports coming out. Most of the big earnings, as usual, are coming out after the market close, but we do have some substantial earnings coming out before the open. We have Merck, some oil companies, and T-Mobile coming out, which is not necessarily material, but could set some early tone as we come in the morning, depending on how these things come out. There's plenty of others. As I mentioned, there's 223 companies reporting today. So as we go through the balance of this week, we'll finish the earnings for the most part. There is about 50 of them coming out on Friday, but this is going to be the big dump of earnings today, and also along with the economic numbers I talked about, could set the tone for a little negative. This will be an important pivot day. We're going to need to close under the 3,800 number, and I will, like I said, cover all this in the technicals here in a few minutes. There's really not a lot more going on as we look at the markets for the balance of the week. Things are going to get very focused on the employment situation and the economy as we finish the week. So let's go ahead and take a look at the charts, see how they're setting up for Thursday. As I begin with the WaveTech Database, we're going to be seeing that we did see about 400 new buy signals and 130 sells, so we have a bullish rotation. We saw the percent bullish go up from around 33.3 to 34.5, so we are seeing a little more traction. As I talked to you about last night, the 42% level is going to be the first point which we will be able to say that, hey, we've got a bottom here, and we're starting to see some further recycling of these trends that got demolished. And remember, we were at around 71% bullish, dropped all the way down to 27. Now we're starting that rebuilding part of the database and starting to look for new trends to set up. Now we may not get above 42%. That's the number I'll be watching over the next several days. So what we're seeing here so far is the stabilization in the market. As you'll see here in the technical section, there are still a lot that is pointing to more of a sideways grinding with some downward bias, but this database is definitely starting to show some signs that it's stabilizing here, which is a positive event. As we begin the review of the S&P 500, looking at the futures, they're currently down 850 points. They're at 38.15. I mentioned in the opening comments, we're going to need to get through this 3800 level. If we look at the moving averages in the pattern, we are at 37.97 is the 10-day moving average. 37.97 is the 21-day moving average. So that's going to be your key pivot point. They're both at the same value. The next level below that will be the 40-period moving average at 37.48. But as we look at the market grid, you'll see that S1 is 85.05. So if we get through that level, we should penetrate that and trade down toward at least the S2 number, but these moving averages at 37.97 are going to be key in the pattern. As we go to the cash and look at the SPX, we're seeing a similar configuration from the standpoint of the patterns. The key numbers on this chart is 38.08 and 3800. Both of these will be turning down. You see PPM1 is down. I talked about this in the live stream yesterday, that we're seeing this mixture of one of the PPMs is up, which is PPM2, and PPM1 and 3 are down. This was the same pattern I discussed last night. That pattern continued through yesterday's trading on Wednesday, and now it will be key that we get through that 3800 level. So a close under that will confirm at least 2 more days down and the possibility of going into this 5-day sequence. Now, the 5-day sequence should take us down to a minimum of the 37.58 number, and depending on the action on Thursday, I'll talk about on Friday's video what the key numbers will be as we come into the end of the week. As we review the NASDAQ futures, yesterday we closed at the low of the session. The low was 13,386. We closed at 13,394. So it's pretty much the low of the range for the day. We're seeing some follow through overnight as we're down 24 handles right now, 13,370. There is a similar pattern developing in the NASDAQ where 13,300, the 10-day moving average, will be the key pivot. Next number, 13,103, the 21. As we look at the grid, you'll see similar numbers to these, where you'll see the S1, 13,355, and then S2, 13,251. So I would expect to see us trade down into that range between S1 and S2, and probably these moving averages will represent support. But we'll have to get through this 13,300 level first. And if that occurs in the first couple hours of the day, we're likely to see this thing continue down for the session and close lower. And as I mentioned in the S&P, this pattern today is going to be very critical for the next several days, as it looks like we should at least get 2 more days down. If we close under the 21-period moving average at 13,103, then we're likely to get a couple more days, and the 40-period moving average is going to be the minimum target at 12,889. And as in the S&P, I will cover this in more detail in tomorrow night's video because it will be more relevant. On the upside, the key number to watch will be the R2 number, which is 13,564. Break over that would print us up to potentially to move and challenge yesterday's high at the 84 level, 584 level, but I don't expect that to happen right now. We should stay under pressure, and the first couple hours of trade are going to tell us a lot about how this thing's going to finish out. Next market that I'll cover is the US dollar. The dollar is moving slightly higher. We're seeing PPM 1, 2, and 3 starting to accelerate now. I talked about this in the live stream yesterday. If you want to see the full details of the analysis, go to the live stream, and I went through in depth with the dollar and what the expectations are. But we are seeing the market move higher. The current configuration suggests we should go to around 91.80 ultimately, maybe into the 92 handle, but this is going to keep the pressure on gold. The reason why I covered this market tonight is because of the effects that it's having in gold. I don't think there's going to be any really material effects as long as we stay under the 92 handle, and I don't see us getting above that certainly this week. That will be a challenge for next week, but these PPMs are set up. They are very bullish, suggesting that trend is developing, and there is substantial amount of resistance around 92 92.05 to 92.30. So I don't see us getting above there, but that movement in itself is going to keep plenty of pressure, not only on gold, but in silver as well. The final market that I'll cover tonight is gold. Gold is seeing a lot of pressure overnight. We're down almost 1%, 1817. This is right in the range that I discussed yesterday in the live stream. S3 is 1815.70. We've seen a low of 1816.40. That is likely going to be the low of the day, but if we get through this 1815, then 1809, and then I'll show you some numbers on the weekly chart here in a minute that suggest we're going to see potentially under 1800. But right now we're seeing the PPM starting to accelerate. PPM 1 and 2 are in trend mode to the downside, so there's a lot of overhead resistance on this market. It's just not going to be able to rally. And I know all of the talk around Wall Street and there's going to be a squeeze on gold and silver, not going to happen. There's someone else in control of this market, guarantee that. Let's go ahead and take a quick look at the weekly chart. And this is what I covered in the live stream yesterday, but this 1822 number has been taken out already. 1807 to 1794 is the extreme for the week. As I mentioned in the live stream, the positive here is that PPM1 is breaking through its first and second derivative, but this is not a bullish enough number to pull the markets back up. And this strength that we're seeing in the Dow is going to keep the pressure on. So it won't be until we get an update on the market grid for next week that we'll see the possibilities of where this thing may go. We may ultimately challenge these lows that we made back at the 1780 level, and if that's taken out, then there's going to be a whole nother set of lower prices. And as I have discussed many times over the last couple of weeks, I don't see a trade in this market right now. If you did want to short it, you'd want to short it against 1837. The probabilities of getting up there right now aren't real high, and I certainly, if we saw a bounce off of these levels here, I wouldn't be looking to short. I would stay neutral in this market and look for the patterns that are going to set up for next week. I'll cover that on Sunday night. This will complete the video for tonight. Thank you so much for watching. Thank you for coming to the live stream yesterday. It was awesome. We'll talk to you tomorrow night.